I guess a faint buy the dip reaction, and it was pretty dramatic. It brought us back to about 1 o'clock level, so the 3 hours of selling in the interim was reversed toward the end. Market got pretty oversold on a very short-term basis. The VIX went above 20, closed below 20. So it seems as if I think people are saying, look, we don't really know if 2.5% decline over 2 days pretty much priced in whatever uncertainty we're immediately worried about. I don't necessarily think we can say, gee, that was it. We're past all this. We're still going to be in suspense about trade on Friday. And then some of the leading stocks like FANG, like software, got pulled into the selling vortex a little bit today. So got to see if they find their footing or not.
Let's dive more into today's major sell-off. Bob Pisani joins us with some of the movers, what he's watching. Hi, Bob.
Well, that was a lot of fun. 180 points in 10 minutes or so, as Arcashian said. Beware overnight tweets. Market can go up on an overnight tweet as well as down on an overnight tweet. Much heavier volume today, much higher volatility. 20 on the VIX here. We were at 16 or so here. Let's just take a look at some of the usual suspects. Boeing, they get about 15% of their revenues over China, down about 4%. By the way, you see that 357? That's the lowest price for Boeing since the middle of January. Look at that volume there, 9.4 million shares. That is twice the normal volume that we see. Other sectors affected. We talked a lot about the retailers and how they're impacted. Here's Gap. Here, of course, Gap, big importer of a lot of Chinese goods over there. That was down throughout the day. Other ones, Pier 1, Best Buy, electronic importer from China, Kohl's as well, also to the downside. Then there are companies that have very significant exposure to China. Semiconductors. Micron, for example, 60% of Micron's revenues are in China. That stock's been under pressure notably and down again today, along with all of the other big semiconductor stocks. A lot of companies, 50% of their revenues out of China in the semiconductor area. Also over on the NASDAQ, I just want to mention Expeditors. Very tough day for the transports overall. They had got earnings below expectation, and they specifically said international air freight business was challenged due to lower export volumes out of Asia. That's China, lower export volume, and that's what they're talking about. That was a tough day for them. But I want to point out the companies that are not so exposed to China, that were all still down today. Here's Home Depot. What kind of revenue exposure they have to China? Not that much. They may import some things overall, but you can see here down 2.5%. And we saw this with many, many companies that don't have any obvious big direct revenue exposures. Pepsi, Walgreens, Colgate, all were down roughly 1.5% to 2%. And the point about all of this, if you take a look here about why the markets are worried, higher tariffs for months on end mean lower global growth in general. It doesn't matter whether you're importing or from China or you have revenue exposure in China. That means lower global earnings, and it means a lower multiple for the market. And that's why everything came down today. Guys, back to you.
All right, Bob, thank you. Joining us to talk more about the market today and what to do next is Kourtney Gibson, Loop Capital president. Kourtney, how worried are you about these trade talks with China later this week? And what are you doing with your positions?
Well, you know, it's really interesting. I've said for a very long time that this is the catalyst, right? What happens, what's coming out of D.C. is going to really make or break what could be a market that could create a slow melt up. The economy is doing better. We can't argue that. You can't debate that at this point. Consumer sentiment is at all-time highs still. And so then you have this wonderful tweet that comes out, and what does it do? It throws uncertainty into this marketplace. What I found very interesting today, though, at Loop Capital on our desk was that we didn't see a whole lot of movement. We cover institutional investors from a trading perspective, and we did not see a lot of movement. Even if you look at the volumes on the New York going into the close, before I popped on the channel here, we were down almost 25% versus yesterday in volume on the New York, which leads me to believe that it was not the institutional investors that were really driving this catastrophe that we saw today in the market. They did probably, however, come in on the close, some of the larger index funds and quant managers, to pick up some of this carnage.
Mike, what's your take on that point there that Kourtney made, that perhaps this was overdone by retail investors and then some institutional investors? I mean, it's hard to say, but either way, important that we picked up at the end of the session.
It remains to be seen whether it's overdone. I do think the selling was very orderly and mechanical most of the day. It was kind of like a 2% across the board haircut. So it didn't seem like panic. And why would it be panic? We're 2.5% off all-time highs. This is just a nick if you look at the long-term chart. Yes, is it a concern that the S&P was not able to get escape velocity above the highs from last September? Maybe that'll turn turn out to be a concern. But for right now, I don't necessarily think it's that much of a shock. And I think it's probably, on a net basis, a good thing that somebody came in and decided to do some buying at the close. Nothing is, to me, decisive about the short term, though. It seems like the market might be just a little bit less stable than it was last week.